I don't believe in starter homes because why? They're stupid. Okay, that's what I have to say. Let me tell you why I think they're stupid. So, if you buy a starter home, like classically, the idea of a starter home is that you buy this house to start off your life and then you sell it and then you go on to something else. Greener pastures. The problem with a starter home is that the reason people like buy houses in the first place, for the most part, this is not everybody, but for the most part, they're buying houses because they want to feel like they own something. They want their own little patch of earth. They want to make their stamp on it. They want to paint the walls. They want to do whatever. That's the reason people buy houses for the most part. Some people don't. Some people, they actually get cerebral about it and they think about what they're actually spending their money on, which is really just a place to live. And they start to realize their quality of life is actually so much better renting because it is. But that's not most people. That's just some people. So people buy starter houses because they want to feel like they can control something. Here's the problem with exerting control. It costs you one of two things, time or money, usually both. And if you're going to put any amount of money into a starter home, mind you, a starter home by definition, you're buying with a mortgage, which if you're buying it today means you're paying a lot of interest on that mortgage. I'm pretty sure, if you go and look at any amortization schedule today for a new loan that comes out, if you pay your loan for like 3 years, I don't know, 3 years, 5 years, something in that range. And then you go and look at how much you paid into that loan, like 2/3 of that money is going to be interest. And a third of it goes down to actually paying down your principal balance. So if you pay, I don't know, $100,000 over 3 years, what is that? 100,000 over 3 years, 33. So that's like a little bit less than $3,000 a month. That means that if you're putting in $3,000 a month to your mortgage, $2,000 goes to interest, $1,000 goes to actually pay down that principal balance, which means all of that means is the only way that you're actually going to be making money on this house, right, is if the value of the home goes up. But for some reason, we have this berserk idea in our mind is that if we buy something, like buy a house that was built 5 years ago with 5-year-old technology, for some reason, we believe that house is actually worth more 5 years later. There is no other thing that we buy that we actually think about it like that. Like if I bought I don't know, a car or a board game or a t-shirt or a computer or like literally anything, a desk, if I bought it and then I sold it 5 years later, I would expect it to be worth less. But with our houses, we assume that they're worth more, even though, especially 5 years ago, they're built with the same crappy materials. You can get better ones today. No, we just assume that it's worth like more than it used to be. Anyway, whatever. I understand why houses sell for more than they used to like be sold for. I'm not an idiot, but I'm just telling you, we think that they always go up. That this is not true. Anyway, okay, 2 years, 3 years, 4 years, 5 years into the loan, 2/3 of your money goes into that loan. It's only going toward interest. Might as well have just been paying rent. So you got a third of it going to pay down the principal. Then you got to pay your taxes and your insurance. And the only way you're actually going to be up on this deal, by the way, is if you actually like see the house go up in value. And mind you, the first 6% of appreciation goes back to your realtor, because it does. Because when you sell a house, it's not free. So there's that out the door.